Hello, and welcome back to Financial Market Insights for Traders. I'm your host, Sophia, and today we're diving headfirst into a topic that every new investor needs to hear: stock market basics for beginners. If you've ever asked yourself, where do I even start with investing? You're in the right place. Whether you're just curious about how the stock market works or you're serious about learning how to start investing in stocks, this episode is designed for you. So grab your coffee, sit back, and let's break this down in a way that's sharp, clear, and totally beginner proof. No fluff, no complicated jargon, just the essentials you actually need to know to start building real wealth. What is the stock market? Let's start with the basics. What even is the stock market? The stock market is essentially a massive global exchange where shares of publicly owned companies are bought and sold. These shares are often referred to as stocks or equities. When you own a stock, you own a small piece of that company, whether it's Apple, Tesla, or Coca-Cola. Companies list their shares on public stock exchanges like the New York Stock Exchange or NASDAQ in order to raise money. And in return, investors like you and me can buy shares, hoping that the value of those shares increases over time. Now, there are two main ways you can make money from investing in stocks. Capital appreciation, that's when your stock increases in value over time. You buy low and you sell high. Dividends, these are payments some companies make to their shareholders from their profits, usually on a quarterly basis. Stocks are traded constantly during market hours, and prices move based on things like news, company performance, and investor sentiment. It's a dynamic living system, and once you understand how to navigate it, it becomes a powerful tool for building wealth. Why invest in the stock market? You might be asking, why should I invest at all? The simple answer is this: if you're not investing, you're losing money to inflation. Historically, the stock market has delivered 7% to 10% average annual returns after inflation. That's better than your savings account, better than most real estate investments, and far better than letting your money sit idle. Investing in the stock market offers growth potential that outpaces inflation. Accessibility: you don't need to be rich or a Wall Street pro. Liquidity: you can buy and sell with ease. And flexibility, with options ranging from long-term holding to short-term CFD trading. Now, speaking of CFDs, if you're looking for a world-class, user-friendly, and cutting-edge stock CFDs trading platform app, I highly recommend checking out Crystal Ball Markets. Their platform makes it simple to get started, even if you're new to all this. It's built for beginners but powerful enough for seasoned traders. How to start investing in stocks, a step-by-step guide. Let's get into the how. Here's a clear, beginner-friendly guide to help you start investing smart. Step 1. Set your financial goals. Ask yourself, what are you investing for? Is this for retirement, building passive income, buying a home? What's your time horizon? And how much risk are you actually comfortable with? If you're 25 and saving for retirement, you can afford to take on more risk. But if you're 50 and saving for your child's college, you'll want to play it safer. Your strategy needs to fit your situation. Step 2. Learn the key terms. Here's a crash course in terms every beginner should know. Stock, a slice of ownership in a company. Exchange, where stocks are bought and sold. Portfolio, the total collection of your investments. Dividend, a company payout to shareholders. Broker, the platform that helps you buy and sell stocks. CFDs, contracts for difference. These allow you to speculate on stock prices without owning the actual shares. And for those curious about trading without directly owning assets, CFDs can be a powerful, flexible strategy, especially in volatile markets. Step 3. Pick your investment style. There's no one-size-fits-all here, but generally you'll fall into one of these categories. Buy and hold. You buy quality companies and sit tight. Dividend investing. You focus on companies that regularly pay dividends. Index funds, or ETFs, these track market indices like the S and AMP Wink with tongue sticking out 500 and offer built-in diversification. Active trading. This is where CFDs really shine. You try to profit off short-term price movements. Step 4. Choose a platform and open an account. You can't trade without a broker. Choose a platform that's intuitive, low on fees, and packed with features. If you're looking for a solid place to begin, Crystal Ball Markets offers everything you need, from real-time analytics to mobile trading and excellent support. Their stock CFDs trading platform is ideal if you want flexibility without unnecessary friction. Step 5. Start small, stay consistent. You don't need $10,000 to start. Thanks to fractional shares and modern platforms, you can invest with as little as $10. What matters more than how much you invest is how consistently you do it. Use a strategy called dollar cost averaging, investing a fixed amount on a regular schedule. It's one of the best ways to reduce your exposure to volatility. Step 6. Keep learning. You'll never stop learning as an investor. And that's a good thing. Financial literacy is a muscle. Use it or lose it. Headphone if you want an easy, beginner-friendly way to stay updated on markets, trends, and trading strategies. Definitely check out the Crystal Ball Markets podcast. Their episodes are packed with practical insights without the jargon. Common mistakes to avoid. Even experienced investors make rookie mistakes. Here are some of the biggest ones to watch out for. FOMO. Don't chase hype stocks because they're trending. Overtrading. More trades usually means more fees and more stress. Lack of diversification. Don't put all your money in one stock. Spread it out. Emotional investing. Don't panic sell or get greedy when markets spike. Ignoring fees. Hidden costs can quietly eat away your returns. Be patient. Be rational. Play the long game. A simple starter portfolio. If you're still unsure where to begin, here's a basic, balanced portfolio idea. 50% index funds, or ETFs. 20% international, or emerging market ETFs. 15% dividend stocks. 10% CFDs on blue chip stocks. 5% cash, or safe bonds. This gives you exposure to global markets, income, and flexibility, all while keeping things simple. The power of compounding. Here's some real talk. The earlier you start, the better. Let's say you invest $5,000 per year and earn an average 8% return. After 10 years, you'll have over $78,000. After 30 years, over $600,000. That's the power of compounding. Why your platform matters. Don't overlook this. Your tools matter. You want a platform that gives you real-time data, smart, intuitive interfaces, demo accounts to practice, low fees, responsive customer support. And again, crystalballmarkets.com delivers on all of that and more. It's a professional-grade platform with beginner-friendly usability, perfect for stock trading via CFDs. Final thoughts. So here's the bottom line. Stock market investing for beginners doesn't have to be intimidating. You don't need to be a financial wizard to succeed. You just need a clear plan, the right tools, and the discipline to stay the course. Start small, keep learning, and stay focused on the long term. Ready to start investing confidently? Sign up at Crystal Ball Markets and explore their intuitive, world-class stock CFDs platform today. Want to keep learning on the go? Subscribe to the Crystal Ball Markets podcast, your weekly dose of beginner-friendly investing insights, market trends, and smart trading strategies.